What's going on, guys? It's K-Dub here with another episode of CryptoZombie. Welcome back to the channel. Hope you're doing all right today. I know it's been a crazy week for Bitcoin and cryptocurrencies. Now, obviously, I haven't had a chance to make a video. I am back, and you can see right here that currently not much has changed. However, we are still sitting around that critical level of around $41,000. You can see it did act as our resistance back here. We did have multiple points of resistance right here as well. It was a little bit of support as well as support during the liquidation cascade, and currently we are sitting just barely below it right now as I'm making this video. Now, just a few days ago, we did have fear and greed index sitting at around 10, showing that there was extreme fear in the cryptocurrency markets. Today, a little bit better, around 21. However, the biggest question on everyone's mind is the bottom in? Is there more pain for Bitcoin? What lies ahead? Well, there are some indicators right now pointing towards a potential relief rally for Bitcoin. Maybe we could see Bitcoin have a little bit of a bounce. However, there is a bit of a catch. Now, we do need to go over that. However, there is one signal flashing right now with over 90% accuracy that has called Bitcoin bottoms quite well. And I'm going to let you know exactly what that level is so you can be prepared to make the best profits in these markets. If you are sitting in some cash on the side, is it too late to get in? Are we going to go lower? Well, historically speaking, there could be massive opportunities ahead. However, we have heard that the Fed is looking to do some potential rate hikes. In fact, they're looking to do up to maybe 4 of them this year. How is that going to affect stocks? How is that going to affect cryptocurrency? Well, I'm going to go into that today. You're going to want to stick around to the end of this video. We have a lot of really awesome things to go over. And also today is the 13th anniversary. Well, actually yesterday was, but I didn't make a video. Obviously, as you guys know, I was out for a while, but we are back now of running Bitcoin for Hal Finn. So with that being said, thank you so much again for subscribing and sticking around. Hope you guys have been doing well in this shakeout. And without further ado, let's dive in and have a look at what's happening. Now, currently, we are still inside of this ascending triangle on the monthly. I said as long as we can close above $42,000 by the end of this month, then the triangle is still intact, right? We have this ascending triangle. Generally a bullish pattern for Bitcoin. We do have until the end of the month, so lots of things could happen. We could wick all the way down here. You know, we had a few breakouts to the top, fake outs right here, but as long as we stay inside this pattern above 42,000 by the end of January, then ultimately I don't really think there's much reason to be seeing all of this fear, but nevertheless, let's dive in and have a look. Now, I just want to point out right here that previously Bitcoin has formed, you know, these falling wedges, and we do have a breakout, a falling wedge, and we do have a breakout. Now you can see right here, we were forming a falling wedge, but we fell out of it. However, interestingly enough, let me just get rid of this right here, totally take it out, and let's put some new lines on and see what's going on, because actually it almost appears as if we're forming a new falling wedge, a giant falling wedge outside of, you know, the smaller falling wedge. And we have seen in the past that each one of these has broken out to the upside. Now, is Bitcoin looking for a break to the upside? Well, we do have massive critical resistance up to 51,600. Will we actually get up to that level? Well, you can see right here, guys, that we're actually still being supported by this legacy trend, right? You can see right here, we haven't fallen below our blue zone. We haven't fallen back into the 30,000s, although we did touch 39,000 very briefly the other day. But ultimately, we are still maintaining this trend, which was acting as resistance down here, but you can see it now currently appears to be acting as support. How long will it hold support? Well, there are a lot of factors that could have to do with what could be happening soon. First off being we are below the 50 moving average on the weekly, right? And I told you guys this is not really great, although we have fallen below it before. It's not the end of the world. In fact, usually, generally, when you fall below the 50, it, you know, historically for Bitcoin has been amazing opportunities for accumulation, right? We dipped below it back here around 6,000. Obviously, we had the COVID crash back here in March. We also dipped below it during the reaccumulation around June 21st and also again on July 21st. And both of those were around 28,000 and 29,000, which were really good opportunities for Bitcoin. Interestingly enough, we are seeing a little bit more support on the total market cap. But here's what's happening, guys. So we actually have funding rates flipping into the negative. You can see below right here. And very oftentimes, whenever we have it, you know, below this line right here, you can see it's obviously in the negative right here. Yes, it doesn't mean that we're looking for an absolute reversal instantly, but it does show that it did provide lots of good opportunity for accumulation. You can see right here, we actually flipped above it, and look what happened. As soon as we got above it, we fell back down again, right? So you kind of want to do the inverse of what you're seeing on the these funding rates, and you can see right now we are dipping back in here again, and we have not really flipped back up to the upside at all. Whereas you could see, right here, as soon as we did flip back up, massive blast off move to the upside, right? So we haven't quite seen that, but what it could be showing is that there could actually be something which is referred to as a short squeeze, right? And that's just when the shorts are piling up. We're seeing this negative negative funding rates, and so sometimes what you have is these shorts kind of get liquidated, right? Like Credible Crypto pointed out, he said, what if the major open interest wipeout everyone is looking for ends up happening because of a squeeze to the upside rather than a move further down, right? Lots of people you see open interest, doesn't always have to go to the downside, but more often than not, it kind of does. But what if it doesn't? He says, this happened in August of 2021 off the 30K bottom. And you could actually see right down here, Will Clemente was pointing this out, that, he says either there is a sufficient demand down at these levels or this is open interest is not aggressive on the longs, whatever. But the point is we could see a move to the upside. Now, why could this happen short term? Now, I'm not saying it's going to happen today or tomorrow. It could happen by the end of the week. Keep in mind, take it with a grain of salt. It could just be a relief rally, but there is some good news. Stick around. We're going to get to that. You're going to love this chart. I'll show you guys, right? But first, Glassnode noted in their latest edition of the week on chain that the longs obviously have suffered constantly since the all-time high, and a squeeze could potentially occur. They say short traders have not been punished for taking on increasing risk. They may find themselves candidates for the next term squeeze. Such an event would be amplified thanks to the tepid demand for spot Bitcoin and futures open interest leverage, which is approaching 2% of the Bitcoin market cap. Now, we do know that, obviously this isn't exactly great, but at the same time, there's not really much we can do. It's going to happen as, the market grows. There's going to be more interest. There's going to be more futures. There's going to be more open interest, but there's also going to be these types of liquidations. Now, if we have a look at what's going on over at Sentiment, you'll notice that they say major whale transactions aren't quite coming at the frequency that they were in October or November, and we're also not seeing as many exchange inflows. Now, while this is a good thing, I'm going to play devil's advocate and tell you why it could also not be a good thing that we're not seeing a lot of coins on exchange. Now, you might say to yourself, well, there's not a lot of Bitcoin and Ethereum on exchanges, so that probably means that, traders aren't looking to sell. Yes, that is the positive. However, the negative is because there are less coins on exchange, there is lower liquidity. When you have lower liquidity, it's a lot easier to move market prices, right? So it's kind of a double-edged sword. It's a good thing in the sense that it shows us that these guys aren't looking to sell, but it's a bad thing in the sense that if a big whale does decide to sell, there isn't as much liquidity and we can see the price cascade lower faster because the order book is thinner. You got to pick and choose your battles here, right? So it is a good thing, but take it with a grain of salt. Now, what everyone's eyes are focused on right now is obviously the stock market. Now, the stock market has been following in this upwards trend, almost kind of scary considering everything that's been going on. But at the same time, if we just get rid of this and have a look right here, the 21 exponential average on the weekly, which is this green line right here, has been a very solid indicator of stock market bottoms. You can see whenever we kind of touch around this area, we do have bounces. Now, we did in fact perfectly touch this level again just during this week. And in fact, we have gone from 45.76 to 46.53. So we have seen a bounce off of these levels, but how long can this hold for? Because as Walter Bloomberg pointed out, 4 rate hikes of about 0.25% could be in the cards this year from the Fed. Now, according to JP Morgan's Jamie Dimon, he says that this would not have an enormous effect on the overall economy, right? But this is the economy. We're not talking about stocks. And while I don't really care too much about what Jamie Dimon says particularly, keep in mind he does say that the U.S. is headed for the best economic growth in decades. And he does say that while the underlying economy looks strong, stock market investors may endure a tumultuous year as the Fed goes to work. Now, here's a little bit of my take on it, and then we're going to get to the really interesting chart that I know you guys are going to love. But basically, I think in a way, would these rate hikes actually affect, stocks and stuff? Of course they would, right? But keep in mind that expecting it, right? It's not like back in the COVID crash back here where, this was a black swan event. Nobody was expecting this to happen. It kind of blindsided the economy. It hit us completely unexpected, and that's why we saw markets globally crash. But we are anticipating the rate hike, right? We already had our little, dip when we got the news. Bitcoin dipped, the stocks dipped, but overall we're expecting it. So you may argue that it's kind of priced in, right? If you're expecting this to happen, you're kind of factoring that in. We know they're going to raise it, so it's not going to come as much of a shock. The same way that I say with the 4-year cycle for Bitcoin, the halving event, it's not going to really come as much of a shock. We know it's coming now. We know the supply gets cut in half. We know it's not going to get cut in half by as much as it used to in the beginning. So because of that, you can argue that the Bitcoin halving is a little more priced in. It's a little more factored in. And I do believe that these rate hikes are factored in. Now, if they come out and just do like 3% overnight, okay, that might be a little bit much. But, 0.25%, 0.3%, we're kind of expecting that. So I don't think it's going to be as bad as some are saying, but I do think that we could see sort of a lengthy accumulation type year for Bitcoin. Maybe we don't see the rally immediately in the beginning of the year, but I still do think that it's going to be a phenomenal year for Bitcoin and cryptocurrencies. It just may not come as fast as everyone was anticipating. So that's basically my situation on that. But here is probably one of the coolest indicators ever. And I do want to give a shout out to Crown Crypto. He did put me onto this quite a while ago. I do appreciate his analysis, but essentially this is the hash ribbon indicator, right? And it's a very simple indicator. Essentially, it just gives you a buy or a sell. Now, keep in mind, or not a sell, it tells you like good opportunities for buying. Now, it doesn't tell you exact moments of when you should buy. In fact, usually once you do see the buy signal, some time usually passes before you actually have that opportunity for the perfect buy. But there is one thing very interesting that happens every single time. And as you can see right here, essentially, whenever we get, and you could take this historically, whenever we do get this buy signal right here, the buy signal never actually, after we get the buy signal, the next low that we get for Bitcoin never goes lower than the previous low. So you can see right here, Bitcoin had a previous low right here at around 3,136. Here we got the buy signal around January 10th. We did continue to trend downwards. However, Bitcoin only went down to 3,300. It never went down to 3,125. And you could see off the bottom to the top, that was about 8% higher than what we had originally, than the original low. Now, keep in mind, there was one time that it didn't work, and this is the only time it didn't work out of all the times, and that was obviously during the COVID crash. So this was a black swan event. Take it with a grain of salt. But historically speaking, every other time that it's ever happened, it has always signaled a bottom. So right back here, we had a signal around September 4th of 2016. We had the bottom sitting at around $484 for Bitcoin. And look at this, guys. The next lower low that we made after that went to about 571, which is about 17% higher than the previous low. So let's keep looking at this. Right? So where did we have another buy signal? Well, we had another buy signal right here around December 27th of 2019. The previous low right there was sitting at around $6,450. And the low that we got after that ended up going down to about $6,900, which was about 7% higher. So we never got back to that previous low, right? Obviously, I don't have to do the COVID crash. We got a buy signal right here on April 24th. Clearly, Bitcoin did not go down to COVID crash levels, so we'll just kind of let that one slide. The lowest we got after that was basically around 6,000. That was almost a 100% increase from the low. So let's go to something a little more, moderate right here. We had another buy signal around July 12th of 2020. The previous swing low was around 8,130. And you could see that the low that we got after that, which happened around July 21st, was 9,100. And that was about 14% higher than the previous low. So what am I getting at? It did signal bottoms and we never went to the previous lows, right? We had another one right back here. This happened in December 2nd of 2020. We had a low of around 16,247 with the next low around 17,665. We never got to the previous low and it was higher by about 10%. And guys, we just had a buy recently again, and this actually happened back in August. Now, I know you're saying, well, this happened quite a long time ago. However, keep in mind that the previous low was the bottom at around 29,584. So historically speaking, considering that Bitcoin never goes lower than its previous lows, and this isn't a black swan event, we are expecting the Fed to raise the rates. We are expecting this. It's not something unexpected. Then this would show us that Bitcoin could potentially come back into this blue zone, but just going on average, saying about a 7 to 8% increase from the bottom to the top, that would actually put Bitcoin potentially at around 32,000. And if we go a little higher to 15 or so, that's around 34,000. And 34,000 would actually put some confluence right here at around Bitcoin had, support right here and resistance during the accumulation, which also, interestingly enough, would put us directly in the center of the blue zone. So to answer everybody's question, is the bottom in? I cannot say with 100% certainty that the bottom is in. However, what I can say is based on previous cycles that Bitcoin should not go really any lower than around 35,000, which would represent the absolute center of this blue zone. So we have talked about this M pattern. It is possible for Bitcoin to potentially come down and test the $29,000 level. However, it is not very common, or I should say it's not likely for Bitcoin to do that. And if we were to have the rally based off of the open interest, yes, I do believe that we could have a short squeeze. Bitcoin could even go up to around $45,000, $46,000. If we are rejected, however, then I do believe that the lowest will probably see Bitcoin go, unless some crazy catastrophic, massive, life-changing global economic meltdown event happens, you're probably looking at an ultimate low of Bitcoin at around $35,000, and that's if. That's a big if we even get to those levels. So to answer the question, is the bottom in? Not 100% certain. Are we close to the bottom? Yes. Is this a good opportunity for buying and accumulating? Yes. And is Bitcoin still looking healthy? Well, to answer that question, yes, Bitcoin is still looking healthy, because if we have a look at the long-term trend right here, we are still, in fact, trending upwards, and we are, in fact, still putting in higher highs and higher lows. So, despite the fear and greed saying that we're in extreme fear, ultimately, really, the markets are lengthening. The markets are, they are having a bit of a cool off. There's a little bit of an issue with how many coins are on exchanges, but overall, if we do look at these indicators, you could see that it does look like Bitcoin is in a very good spot. And, just to kind of point out, Paul Tudor Jones, he was over on Squawk Box this morning, and which, by the way, down here, you could see he actually had talked about buying back in March of 2020, and Bitcoin is up 6.5x since then. But you can actually see that this is still his current stance on Bitcoin and cryptocurrencies.
One of the things you've talked about it, I want to say about 18 months ago on our air, probably March, maybe right when the pandemic was hitting, was your interest in Bitcoin as a hedge.
Bitcoin would be a great hedge.
As an inflation hedge.
Crypto will be a great inflation hedge.
Is it still a hedge at these prices?
Listen, I said then, I said now, I've got crypto in single digits in my portfolio. I have a small trading position in our fund. I do think we're moving into an increasingly digitized world. Clearly, there's a place for crypto, and clearly it's winning the race against gold at the moment, right? So yes, I would think that would also be a very good inflation hedge. It would be my preferred one over gold at the moment.
So that being said, Bitcoin still does remain an amazing hedge. Short term, things could get a little bit crazy, but let's be honest, guys, in hindsight, it's always a good opportunity to dollar cost average and accumulate. And before we move on, I do just want to make one quick mention, guys. So Femex has come out with their brand video. The reason that I'm bringing this up is because they're actually offering up to $40,000 in their prize pool. It's super simple. You don't really have to do anything. You just have to sign up, give them your user ID, watch the video, do a retweet or so, and you could get entered to get into this. So if you want, guys, it's totally free money. You literally don't have to do anything except retweet. So if you are interested, definitely check that out. Sign up in the links below. You can get up to an extra $4,000 in bonuses. And obviously keep in mind Femex and Bybit and all these exchanges, yes, they do leverage, but they also have really awesome spot trading. And if you go over to Femex, you can actually sign up for 0 fees. So if you're tired of paying all these fees for trading, $10 a month, unlimited trading. You kind of can't beat that. So make sure you watch the tutorial popping up above if you're interested, and also use the links below if you guys want to get those bonuses. And you can obviously, join in on this. There's a month left, but don't wait too long, and then you can get in for that $40,000 bonus. So talking about cryptos that, obviously I do still believe are looking quite good. I told you guys one of the biggest things I was looking at this year was layer zeros. I'm still looking at layer zeros. We need this cross-chain interoperability. We need liquidity among all of these chains. I still do believe that Symbiosis is going to position themselves as a very, very good project. I've been talking about this. As you guys can see, they're actually up to $3.75 right now. Let me give it a quick refresh. $3.70. Okay, it's up 12% today. Very nice day for this. But if we go back historically, I told you guys right down here would be massive opportunity for accumulation. You can see it has actually started to take off right here. And from the lows of around $2, it is up 75%. 75% already since we've been talking about it. So Symbiosis Finance is definitely a project I would check out. Not trying to shill it. I just personally think that layer zeros are going to be very big this year. Maybe we're not really hearing about them right now, but I like to be ahead of the curve. You get into things that are popular, that everyone's talking about, and then you get on the end of the bandwagon. This is getting on the wagon before the wagon is even taken off. You're securing your place, and I do believe layer zeros are going to be very big this year. ZK rollups, DAOs, things like that. So Symbiosis Finance with a very low market cap, sitting at around 35 million, fully diluted valuation 365. Still not that bad in my opinion. So definitely check that out. And obviously having a look at what's been going on with Phantasma. Still very bullish on Phantasma. As you can see right here, Phantasma is essentially, we formed this triangle, asymmetrical triangle right here. It looks like we're forming another asymmetrical triangle right here as well. Really great buying opportunities would be anywhere between $2.70 and $2.60. Ultimately, though, Phantasma still down from the all-time high, about 25%. So I do still anticipate this continuing to, consolidate. And then overall, you can see we are forming a bigger ascending triangle, potentially an ascending triangle is what it looks like. And we do know ascending triangles are bullish. So still very bullish on Phantasma, guys. But essentially, that is it for me. Let me know what you guys think below in the description. Do you agree? Or in the comments, do you agree with me? How do you feel about this hash ribbon indicator? Once again, shout out to Crown Crypto. He definitely was the one that put me on to that. So, I have been keeping my eyes on that. And yeah, let me know, guys. That's it for me. Thank you so much for coming back to the channel. I love you. You guys rock. You're the reason that I make these videos. Until next time, stay crypto. Check out these videos, of course, if you haven't. And of course, peace out.